Warren Buffett recently gave an interview on CNBC where he discussed his investments in 5 Japanese companies. He explained that he was attracted to these companies because they were big, and he understood their business models. He believed that they were selling at attractive prices compared to prevailing interest rates. Buffett compared these Japanese companies to Berkshire Hathaway, as they were conglomerates with diverse interests. He saw them as similar to his own company and felt comfortable investing in them. He believed that they were undervalued and presented good investment opportunities. By investing in companies within his circle of competence and at attractive prices, Buffett followed his investment principles. He emphasized the importance of understanding the businesses one invests in and considering valuations relative to interest rates. Warren Buffett further explains that they initially bought a little over 5% of each company.
Whatever it was.
2020.
And we had bought just somewhat over 5% of each company, and we were buying identical amounts. So we announced at that time that we bought this 5% interest in each of the 5. I wrote a letter to the CEOs of each of the companies saying the same thing, that we would never buy, Berkshire would never buy more than 9.9% without their consent. And that was my word. It was Berkshire Hathaway's word, and they all welcomed us in, and their results have exceeded our expectations since we purchased the group. I think their dividends on average have gone up 70% or something like that, and we now own 7.4% of each of the companies, and I just Greg and I together, we wanted to come over and talk to them, and so we got on a NetJets plane and plug and flew over, and we have had a terrific time meeting each of the 5 sequentially over the last 2 days, and it's been fascinating.
And announced their investments. They sent letters to the CEOs of these companies stating that Berkshire Hathaway would not buy more than 9.9% without their consent. Fortunately, the CEOs welcomed them in, and the results have surpassed their expectations. Buffett mentions that since their initial purchase in August 2020, the dividends from these companies have increased by an average of 70%. This has been a pleasant surprise for Berkshire Hathaway. As a result, they have decided to increase their stake in these Japanese companies. They now own 7.4% of each company. Overall, the investments have performed exceptionally well, exceeding their initial expectations. This has led to Berkshire Hathaway's decision to further invest in these companies due to their positive performance and dividend growth. Warren Buffett and his team had a successful and enjoyable trip, meeting with each of the 5 Japanese companies they invested in. They feel even more confident about their investments and are pleased with the company's performance and approach to business. One interesting aspect of this trip is that the Japanese companies expressed their willingness to build a strong relationship with Berkshire Hathaway. They see potential for further collaboration and business opportunities in the future. If any of these companies identify additional investment opportunities, they know they can approach Berkshire Hathaway for support and evaluate those opportunities together. This shows that Berkshire Hathaway is not only an investor, but also a potential partner for these companies. Warren Buffett emphasized their readiness to provide capital and explore new ventures together. This highlights the mutual trust and potential for long-term collaboration. Overall, Berkshire Hathaway is excited about the future and looks forward to continued growth and opportunities with these Japanese companies. Warren Buffett was pleasantly surprised by the unique characteristics of each of the 5 Japanese companies he invested in. He had high expectations, but the companies exceeded them in every aspect. This has led many to see his investments in Japan as a stamp of approval. Warren Buffett explains that a couple of years ago, he was amazed at the opportunity to invest in these Japanese companies with an earnings yield of around 14% and growing dividends. Meanwhile, people were settling for meager returns of 0.25% or even nothing. He highlights the attractiveness of these companies, which had a higher likelihood of growing compared to the low returns offered elsewhere. It's worth noting that the overall Japanese stock market is currently trading at a relatively low price-to-earnings ratio compared to its historical average. This suggests that Japanese stocks may present good value for investors, further supporting Warren Buffett's interest in the region. Warren Buffett's investment philosophy involves comparing investment opportunities to the risk-free rate, which is typically represented by government bond yields. If the risk-free rate is low, he looks for opportunities that offer higher returns. This approach helps him identify attractive investments and maximize potential gains. Warren Buffett always compares the earnings yield, or free cash flow yield of stocks he buys, to the yield on bonds. In this case, he found the Japanese stocks he invested in to have an average earnings yield of around 14%. When comparing this to the low bond yields of around 0.25%, the Japanese stocks appeared much more attractive. For example, one of the stocks Warren Buffett purchased was Mitsui & Company. The earnings yield for the stock was around 14% when he bought it, and it has now increased to about 19% due to the company's earnings growth. This means that the company could potentially return nearly 20% to shareholders, based on its current price and earnings. Warren Buffett understood these investments and believed they were undervalued relative to their potential returns. He plans to hold them for the long term, expecting them to perform well over the next 10 to 20 years. Additionally, Warren Buffett mentioned that the dividends of these companies have been growing. For example, Mitsui & Company's dividends per share have almost doubled since he purchased the stock, resulting in an increase in his dividend yield on cost. This is why investors appreciate dividend growth businesses, as the dividend yield can continue to increase over time. Warren Buffett's investments in Japanese trading companies have been highly successful. The stock prices have more than doubled since he purchased them, and he is receiving significant dividends from these positions. Berkshire Hathaway continues to buy these Japanese companies, indicating Warren Buffett's continued interest in them. The attractiveness of these investments is evident when considering the earnings yield. Even now, the companies are generating a 20% earnings yield, which is much higher than the returns on bonds, currently around 5%. This means that Warren Buffett is getting a much better return by investing in these Japanese companies than he would if he put his money in bonds. Overall, Japan appears to be an attractive market to invest in. The companies are trading at a discount compared to their historical average, and their earnings performance is solid. This has drawn the interest of not only Warren Buffett but also other investors.